Hubert Senters here. Let's talk about angel investing. You may have heard this story before, but when Jeff Bezos convinced 22 investors to back his new company called Amazon in 1994, the returns were mind-boggling for those folks. Now, heads up, I think he tried to convince, I think it was like 60 or 70 people, and he was only able to convince 22 of them. If you'd had the opportunity back then to invest in his crazy idea, which is called Amazon back in the day, and it still is today, your $50,000 would be worth, it would have increased 14 million%, and your return would have been $7 billion. Not a bad return. You could have also been an angel investor in Dropbox and invested a potential $15,000 in the investment would now be worth $21 million. Now, I didn't do either one of those, but I was an angel investor in a fund called Slack. You may have heard of it before. It's went public, and we were able to sell our angel investment to another group of angel investors before it went public. So it was a nice little exit for us. Now, you might be saying, I don't have $10,000 or $15,000 just laying around to invest in startups, and I understand that. You could have invested $500 into Dropbox, and it would be worth $536,000. I'm going to walk you through some of my investments in angel funds. So I've either invested in these in an angel investing fund or individually. Slack, Zcash, Streamlabs, these are the exits. A unicorn exit is when the company grows to at least $1 billion of valuation. Zcash, we had a 25x to 69x. That's a multiple. So if you put in $1, every dollar would have been worth $25 to $69, depending on your exit. And then here's another list of some that we've exited or are currently growing. Clearbit, we're up 125. Kartra, you can see these on the screen. Kartra, 44x. Teachable was a 28x. Wish we'd held that on the online stuff going through COVID. We would have made more. The hardest thing about being an angel investor is trying to figure out how to pronounce some of the names that you invest in. So let's discuss what is angel investing and how do you get started in this potentially lucrative business. First and foremost, it is super simple. All you are doing is you are giving your hard-earned money, your cash, in exchange for either a percentage ownership in the company, okay, as an investor, or percentage cash flow, or both, or they will try to just sell you the product, and you never want those deals, all right? So stay away from those deals. So percentage of ownership or percentage of cash flow and or both, or it'll be a crowdfunding thing, which you never want to mess with. But before we get started in that lane, let's talk about in one of two categories that you're going to have to figure out. Are you an accredited investor or are you a non-accredited investor? It's super easy to figure out. Now, it used to be that only high net worth or wealthy individuals used to be able to play in this game before I got started. And when I got started, it was still the fact. But the rules have changed slightly lately. So if you're an accredited investor, they actually designed it, in my opinion, to keep the little guy out. They always guise it as they're trying to protect the little guy, but really I think it was just to keep the little guy out of the game. So an accredited investor is someone that makes at least $200,000 per year or $300,000 with your spouse for the previous 2 years, and you have a high reasonable expectation that you'll earn at least that much this year. You can also qualify if you have a net worth of over $1 million, either alone or together with your spouse, excluding the value of your private residence. All right, that's an accredited investor. And when you're an accredited investor, you can invest in other funds, and you can take a little bit more risk. So one of the funds that I'm in with a group of my friends that are successful angel investors, I think we invest $50,000 a year every year in that fund. And you need to know that it's a risky business. If you don't understand the risk that also comes with the potential reward, you just have to be careful, all right? It is a very lucrative business if done correctly, but it also has a high amount of risk. Now, if you're not an accredited investor, you're what's called a non-accredited investor. Now, the cool thing about non-accredited status now, they've actually opened up and loosened up the rules a little bit lately, where now companies or startups can raise up to $1 million in a 12-month period from non-accredited investors. So in other words, if you make less than $200,000 a year, you're considered a non-accredited investor. That's okay because they've loosened up the rules a little bit. Now startup companies can go to non-accredited investors and ask for them for money. And you don't have to put in $1 million. You could put in like $50 and invest in these things. You do have to qualify in this one way, which is super simple. You got to be 18 years of age to be eligible to invest in these type of companies. And they'll set a minimum based upon how much money you make every year. So it's based upon your net worth. So they're trying to keep you from hurting yourself too much. Now, that's how it begins. Let's talk about the types of investments that you can look to invest in. I focus on tech because I think it gives me the biggest return. So the one thing you've probably seen online is a bunch of crowd-funded things, right? Because this is being more and more popular lately, where they'll crowd-fund a product. That's not angel investing. An example of a crowd-funded product, let me just go grab one. So I just Googled crowdfunding services and sites on Google and came up with GoFundMe. All of these sites are going to be slightly different. What you want to stay away from are the ones like a GoFundMe account or a crowd raising site that gives you access to the product but no ownership. All right, so here's a good example of a crowdfunding product business. This is Kickstarter. So let's say that you were interested in investing in a wind catcher, portable powerful generator, or an Orb One stovetop cook maker. So let's click on that. It's not techie enough for me. I like actually in Silicon Valley stuff, but this is a good example. So this one has been funded $272,000. Their goal was $250,000. And how they do this is you can see down here where you pledge. If you pledge 120 or more, you will get a big thanks from Kickstarter, and you'll get, let's see here, only certain countries. Let's see, token. Let's see here. Let me read real quick. All right, so basically all you're going to get here, I can't hover over it or cover it up, is you get a big thanks from Kickstarter supporting it. You will also receive one Orb One stovetop cook or coffee maker for 20% off. So basically, if you give them $120 off, they're going to take a 20% off your coffee maker purchase. Okay, so you just get the product. You don't get any ownership or any cash flow if this thing is successful or not. You're basically just prepaying, or you're betting on this product, but you're not betting on the business. Now, if you want to get into accredited investing stuff, you would go over to Angel. I figured I'd pull it up here. So where me and a bunch of my buddies hang out is angel.co. And here you can see Angel List Talent, Angel List Venture, Product Hunt, and this is where if you're an accredited investor, you can spend some time. But the number one key is if you're an angel investor, the most important thing is you've got to have really good deal flow. If you don't have really good deal flow, you better know somebody that knows somebody, or know somebody that knows somebody that knows somebody. It is a deal-centric business. You have to know the good deals, and you also have to have a particular way of how you vet the companies that you're going to invest in. So we covered ones not to deal with on the crowd-funded side, and we also covered one if you're an accredited investor. But what if you're a non-accredited investor and you want to invest in companies? Well, you can go to sites like this. Now, this site is called Republic, and it's a good site to find deals for non-accredited investors, but you still have to know how to correctly pick these bad boys. And this is why, number one, having decent deal flow, and there's a bunch of websites like this out there. Some are good, some are not so good. I do like this one, though. Now, the reason I say you have to be really good at picking them is you have to know about the J curve and being a successful angel investor. So I'm going to grab a pen here and draw on the screen real quick for you. This is what I have found over my career of being an angel investor, and a lot of my friends agree with this. So this is how this works. So we're going to pretend that you've got an X and Y axis right here like this. Now, my drawing's not going to be perfect. But what's going to happen is you're going to invest some money, and let's say you're going to have 10 deals, all right, 10 deals. You're only going to have 1 or 2 out of 10 that are actually going to work and pay you. And that's okay. That's by design. What's going to happen when you give a company some money, let's say you put $100 in each one of these, so it's going to be $1,000 a piece. So your first 3 or 4, you'll start out, you'll give them some investments, and then they'll just go out of business. Okay, so that's your first 1, 2, 3 companies just go out of business, and you want them to go out of business fairly quick. And that way, you know, you're picking, and some of them are working and some of them are not. So you got 3, so you got 7 left. And let's say you have, I'm going to do another, so it's 3, 4, 5, 6, 7, 8. Okay. And then you're going to have 9 and then 10. All right. You'll have about 3 of these that'll kind of just be break even. And then you'll have 2 of these right here. So you got 1, 2, 3, 4, 5, 6 of them. 3 of them went out of business. 3 of them are kind of just hanging on. They're just breaking even. 2 of them will begin to grow slowly. And then 1 or 2 of them will go vertical. Okay. So this little initial loss that you experience is very normal. You should get a hockey stick type of return from 1 or 2 of your picks. And what you want to do is you want to pick anywhere from 10 to 20 deals a year. I like about 10 to 12 myself. And that way I only have to be right on 1 or 2. Now, when you put your money in these investments, you don't get a board, you don't get a seat on the board, you don't get a vote. You're giving them your hard-earned cash, and you're saying, good luck, I hope you make it. Now, you can be what's called smart money, and you can advise them in a niche or a category that you know something about. Or if you can help them cut some deals and grow, they'd love that. Or you can be dumb money and just throw your money at them and say, good luck, I hope you make it. So it's very important that you invest in a category that you know a lot about, because there are way more deals than there is money. So it's really important. You're going to have a lot of people asking you for money, and you can invest in more deals than you'll have cash available to you. So it is important for you to invest in your area of expertise so you can get 1 or 2 out of 10 deals. Initially, the first 2 or 3 are going to go out of business, and then 3 or 4 of them are just kind of break even, and then you'll have 1 or 2 that'll start growing slower. This does take time for this to work. Amazon didn't make their investors $7 billion overnight, so this is not a day trade. This is not a swing trade. This is an investment, okay? The average hold time is probably around 6 years or more, but the returns can be exceptionally high if done correctly. I hope this answers some of your questions about angel investing. It's not hard. It's not complicated. You just you kind of just got to figure it out on your own, or know somebody that knows how to do it to open up the door and let you sneak a peek inside to see how this business works. Good luck. Hope it helps. And I'll see you on the next video.